Welcome to The Explainer. Today, we're diving into a really fascinating intersection of massive macroeconomic shifts, artificial intelligence, and some incredibly cutting-edge hardware. We are analyzing the wild recent market movements surrounding Ouster, that's ticker symbol OUST, a company sitting right at the beating heart of this modern automation wave. We're going to break down the data, the specific sources, and the overall market sentiment driving this stock in May of 2026. Okay, let's dive into this. 26.31%. Let that sink in for a second. That is the massive one-day surge in Ouster's stock price that we saw on May 13th, 2026. This absolute explosion in volume pushed the stock aggressively past the $30 mark, actually hitting an intraday high of $34.90. But, to truly understand a move like that, we can't just stare at the ticker tape. We have to uncover the actual catalysts driving it. Here is our roadmap for today. First, market trends and physical AI. Second, the NVIDIA Hyperion catalyst. Third, financials and growth metrics. Fourth, competitive edge versus risks. And finally, investment strategy and outlook. Section 1, market trends and physical AI. Because as we know, stock performance never happens in a vacuum. May 2026 has been, it's been a complex but highly stimulating environment for tech stocks. First off, the S&P 500 and NASDAQ both hit record highs, heavily driven by optimism around tech and AI. A major catalyst here was reports of Donald Trump visiting China alongside NVIDIA CEO Jensen Huang to discuss trade and AI cooperation, a diplomatic event that immediately sparked a broad tech rally. Meanwhile, looking at the monetary side, the Senate just confirmed Kevin Warsh as the new Fed chair, all while inflation is sitting at a really sticky 4% CPI. And crucially, Brent crude oil hit $107 a barrel amid tensions in the Middle East. That's a historic 14-week winning streak for the energy sector. So, what does this all mean? High energy costs are drastically accelerating the demand for industrial automation and energy-efficient infrastructure. And that booming demand for automation brings us to a critical concept we need to define: physical AI. Now, unlike the large language models you might use to, say, write an email on your laptop, physical AI systems actually interact with and perceive the physical world in real time. They are literally the brains behind that delivery bot dropping off your dinner, or warehouse robots moving inventory, and even smart city infrastructure. But here's the catch. To make split-second decisions in the real world, physical AI requires incredibly high-fidelity, real-time 3D data. It essentially needs to see perfectly. Section 2, the NVIDIA Hyperion catalyst. Let's look at the exact event that triggered this massive mid-May growth. On the morning of May 12th, a major domino fell. Ouster officially announced that its Rev8 OS digital Lidar sensor family was qualified for the NVIDIA DRIVE Hyperion platform. Guys, this is massive. The Hyperion platform is basically the gold standard reference architecture for autonomous vehicle development right now. Being qualified means that automakers all over the world who are already using NVIDIA's platform can now seamlessly integrate Ouster sensors right into their Level 4 autonomous driving systems. It's a monumental validation of their tech from literally one of the most important companies on the planet. Now, what's really interesting here is the secret behind earning that NVIDIA qualification, and it comes down to native color LiDAR. Traditional LiDAR, it only measures spatial dots, just your basic X, Y, and Z coordinates. But native color LiDAR integrates red, green, and blue visual data directly at the silicon level. By assigning color to every single 3D point, it creates a photorealistic environment instantly. This lets the AI recognize things like traffic signs or the color of a pedestrian's clothing natively, completely bypassing the really complex, latency-heavy software fusion that usually tries to stitch standard camera and LiDAR data together. It's a total game changer. So following that huge NVIDIA news, we immediately saw a flurry of corporate and insider activity. First, a strong signal of confidence. Director Virginia Boulay purchased 1,658 shares in the open market at around $25. On the flip side, CTO Mark Frichtl sold 34,600 shares at around $30. Though the sources specifically note this was part of a pre-planned 10b5-1 automatic trading program established way back in 2025, so not a sudden shift in sentiment. Finally, Ouster announced the launch of a new $100 million capital offering led by Oppenheimer and Rosenblatt. Let's take a quick educational pause on that last point. What exactly is an at-the-market or ATM offering? Well, it allows a publicly traded company to sell shares directly into the secondary market at current prices. For a high-growth company like Ouster, an ATM provides incredible flexibility to raise crucial R&D and operational cash only when share prices are favorable. However, and this is important, as an investor, you have to be aware that this introduces the risk of share dilution, simply because more shares are entering the market. Section 3. Financials and growth metrics. Let's see how all of this actually builds Ouster's fundamental valuation. Ouster's Q1 2026 earnings brilliantly illustrate the company's momentum right now. Total revenue hit $49 million. That is up 49% year over year. Even more impressively, product revenue, which is the real core of their organic growth, jumped 55%. This marks 13 consecutive quarters of product revenue growth. We are also seeing solid efficiency gains, with gross margins expanding to 43% and their net loss actually shrinking by over 20%. Plus, they shipped over 12,600 sensors this quarter, which is absolutely their best ever. And backing up those quarterly metrics is this highly reassuring number, $175 million. That is Ouster's cash and cash equivalents on hand as of March 2026. But what makes this war chest so formidable is that Ouster currently operates with zero debt. Zero. Given their improving adjusted EBITDA metrics, management's stated goal is to reach break-even operating cash flow by the second half of 2026, all without needing to rely entirely on external funding. Section 4. Competitive edge versus risks. It's absolutely vital we conduct an objective analysis of where Ouster stands in the broader, highly competitive market. All right, let's weigh the bull case against the bear case. On the strength side, Ouster has a highly scalable silicon architecture, a massive intellectual property moat they gained from their Velodyne merger, and really diverse revenue streams. They aren't just sitting around waiting for cars to become autonomous. Their Blue City smart traffic systems and Stereolabs robotics divisions are generating real cash today. Conversely, the bear case highlights very real risks. That ATM program we talked about, it means capital dilution is an ongoing threat. On top of that, Chinese rivals like Hesai and RoboSense are waging some incredibly aggressive price wars, and the broader macroeconomic environment could absolutely still delay the mass adoption of autonomous vehicles. To truly grasp their primary competitive advantage, we need to quickly define L for digital silicon. While competitors often have to manually assemble thousands of analog parts, Ouster uses proprietary CMOS semiconductor architecture to consolidate all those core Lidar functions right onto a single silicon chip. This drastically reduces manufacturing complexity and essentially brings Moore's law to the Lidar industry, allowing for exponential performance gains and cost reductions with every single new chip generation. Section 5. Investment strategy and outlook. So the crucial point is how analysts are digesting all this data to actually formulate a strategy. Based on the research, analysts have mapped out a highly structured, step-by-step game plan. Step 1. Don't chase that NVIDIA-fueled spike. Instead, wait for a natural dip to the $26 to $27.50 support zone. Step 2. Only scale your position heavily once they actually confirm their Q2 revenue guidance of $49.5 to $52.5 million, which will validate their growth trajectory. Step 3. Manage risk very strictly. Look, with a high beta of 3.06, this is a volatile tech stock, so analysts suggest limiting exposure to just 5 to 10% of your portfolio and keeping a hard stop loss right at the $24.75 double bottom support level. Step 4. If the stock hits the short-term $40 target, take profit on 50% of your shares, holding the remainder for the longer-term 2027 target of $55. Which brings us to our final, somewhat provocative thought for the day. Ouster has clearly moved way past being just an automotive play. They are actively building the infrastructure for how machines perceive our world. As physical AI expands outward, from traffic lights to autonomous vehicles and even to the hands of humanoid robots, is native color LiDAR destined to be the true eyes of the AI revolution? It's a massive question with profound implications for the market in the years ahead. Thank you so much for joining me and diving into this explainer today. Keep exploring and keep questioning.